If you're paying attention to Kansas City entrepreneurship, then you probably have heard of the Angel Capital Group. So what's their model and what are they all about?
When people say angel group as opposed to an individual angel, what does that mean, and what are some various models of what an angel group is and how it's composed?
It's an investment club. When my dad was young, and they used to, I mean, this was back in the 60s, they would come and everybody would bring $50 or $100 or whatever it was, and they'd pool their money together and then they'd figure out what to buy,
Right.
whether it was IBM or Hewlett Packard or whatever it was. And on a much grander scale, that's exactly what, to me, an angel group is.
Right.
It's people that goes out and makes educated decisions about where to put their money.
Right.
Usually starts with, one or two people that start to put together the group and then slowly bring on their friends and contacts.
Hey, how about you? Hey, about you?
Right.
How about you? Yeah.
So we've got
Exactly.
some interesting companies we've invested in, or there's some companies that they like to invest in, but they want to spread the risk.
Right. Exactly.
And now what you've seen too, and that exactly to that point, is you've seen them become. It used to be like when my dad's investment club was together, they would buy, stocks in concrete companies or cement companies and IBM and Coca-Cola, places like that. Now those groups are more specific to industry, right?
Right.
So you can get healthcare software management angel group.
Right.
You can get a biomedical engineering angel group.
Right.
That are, so it's more fragmented, but I think it's stronger investment too when you look at it. Don't you think?
Well, I don't know that it's
I think it's more educated investment.
More educated.
More educated investment.
more educated investments in risky investments, or
Right.
in risky industries or risky companies. So angel groups to me are really so that investors that want to invest in small, risky, startup style companies can do that by spreading the risk amongst their friends. Plus I guess it's more fun that way.
It is, and I mean, it is risk, it's insurance.
Yeah.
It's like an insurance company,
Yeah.
spreading the risk around.
Yeah,
Well,
It's
and
a
when you're-
mutual fund.
Also, yeah, right, it's like a mutual fund. And when you're investing in multiple startups, for instance, if one of them makes it big, and see, I look at things more positive. If one of them makes a lot of money,
I said, if you said one of them, and I was like, only one of them's
I meant
doing
like
that,
one of
I'm
them.
in really good mood
One
because the
of them.
rest of them are going somewhere.
okay, well, that's a good point.
I'm in sales now.
Okay, so what you're getting at though is the advantage to the angel is to diversify. That it's smarter to give $10,000 to 10 different small companies as opposed to $100,000 to one small company.
Well, I don't
Yes,
think that's true.
Well,
I don't think that's true at all. I think that can be a sensitivity to it. I mean, you can say you're gonna spread it out like that, but sometimes you go all in, right?
Yeah.
The angel group goes all in because they're committed. Now, most of the time they don't. But there are times when that happens.
There is
it
definitely
gives you a chance to look at a lot of different companies and invest in a lot of different companies. And if there's one that kind of rises above the pack, then you've
Go
got
for
the
it.
opportunity to maybe
Double
go
down.
on.
Yeah,
So
you double
the,
down on it,
the
right?
angel group kind of helps take away some of the back office. They share the due diligence, they share the intelligence that it takes, they share the networks, they share a lot of what it takes, what otherwise would be a full-time job without the whole group.
You have to have a coordinator though. I mean, you were right about, you have to have that core person or persons that are taking the bull by the horns and running it.
Yeah.
Because if you all try to do different things like that, it doesn't come together.
Yeah,
I mean, you
so-
have to have that puppeteer.
So the Angel Capital Group is a great example of one of these groups in Kansas City. And that puppeteer, like what you're talking about, that leader of that group is Rachel Qualls. What does their model look like?
They allow you to mutual fund it, if you will, by saying, I want to be in this particular area or this particular area. And then, because they have a wide range of asks, they help you silo to where you want to go. So, and you can almost blend them. I mean, so she will come and say, okay, I've got this particular company it fits biomedical, it fits software, it fits whatever it might be, what do you think? And you can vote based on like that, those kind of things.
The most attractive part about the Angel Capital Group was their software to me. The software
It's kick-ass.
that I think she developed, the
Yeah,
software
it's
that they
kick-ass.
use basically allows you to go in, see documents from all of these companies, financials from all of these companies, and the way I understood it was to be able to choose where your money goes. So you come in for whatever it is, $10,000-$20,000, and you can place your money with different companies, but you can research every company that you're placing your money with.
Yeah, she's really taken a lot of the back end accounting and legal work and due diligence kind of out of the picture.
Yeah.
What's also special about the Angel Capital Group, as opposed to some of the other angel groups around the Midwest and even in Kansas City, is she has a network of these things. So she didn't set out to say, I'm going to build the best angel group in Kansas City. She set out to say, I'm going to get a network of these in 6 or 7 or 8 different communities. There is more in aggregate angel investors in her group because she went and plucked all of the low-hanging fruit off of some of these very great cities.
Well, and you know, that brings up another great point about the difference between East Coast, West Coast, and Midwestern investing. If you can, Midwesterners tend to be more that I want to dip my toe in the water to see if it works. I'll come in for 50 grand as opposed to $1 million, and we'll see how it goes. And then when they say, oh yeah, the water's warm, in they go.
Yep. It's one thing to get all the cash you need from a rich doctor in Leawood versus be cut in slightly to a bunch of angels in 7 different cities.
Yeah.
I mean, if you want to go through a launch party in Nashville and so there's already 5 angel investors that own part of your company in
You know,
Nashville,
and by the way, I will say
place to
this
go.
too, from an angel standpoint, from looking at it from an investor standpoint, is that the network you build with those people as well is really helpful, because you can find good people out of this stuff too.
Yeah.
For you, and you can then hyper focus on one if you see that. You could hire one if you see one. I mean, those kind of things are there too. So, I mean, there's a big benefit, I think, to having it spread out like that.
Yeah, I would agree.